Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be doing a trade recap. We recently took a swing trade on Tesla, going short. We're going to be talking about why we did that, the strategy, the approach, and how we're up well over $1,500 in about a week. This is absolutely fantastic. This is what we look for trades. It's not about getting rich quick. It's about base hits, those 1, 2, 3% returns that just compound over time. That's what we look for. So I hope you guys enjoy it. Smash that like button, subscribe. But if you guys want to learn more about trading and investing in the market, check out our school. It's fantastic. It's called the Swing Trading Masterclass. We have private live streams, quizzes, lectures, a group chat. But more importantly, we actually teach you to trade. It's not a get-rich-quick scheme. It's not alerts or anything like that. It's honest strategies that I've learned over the past 7 years. So click that link, sign up. I'll see you guys in there. And let's have a quick word from the sponsor of today's video, which is Moomoo. I know a lot of you are just getting started with investing, and one app that I've been using is called Moomoo. It's super beginner-friendly, but still gives you pro-level tools like live market data, easy-to-read charts, and news all in one place. And the best part, new users can get up to 60 free stocks when you open up an account with qualifying deposit. And honestly, that's actually why I tried it. And I've been using it ever since. Check out the link down below if you guys are curious. So if you guys want to get up to 60 free stocks, yes, 60 free stocks, click that link, sign up with Moomoo. It's completely free to sign up, and I'll see you guys in there. And don't forget to sign up with our school. Enough with that. Let's dive into this. So like I said, we recently took a swing trade, and we're up well over, I think actually we're up about $1,800. But the thought process on this trade was very, very simple. A lot of new traders, new investors love to overcomplicate trading or investing or whatever it is, but you got to have the expression miss, M-I-S-S, make it simple, stupid. I'm never going to be the type of trader that's going to have 30 charts up, that's going to have scanners and momentum indicators and momentum scanners and all that stuff. I'm going to have a chart up. I'm going to set alerts, be prepared, and just go into it understanding the game plan and the stock ahead. So we recently saw Tesla here formed this really hard resistance line, right? It hit this red line several times. You guys can see it hit it, and it had a lot of selling pressure. So it hit it once, twice, 3 times, 4 times, and then recently it hit it again 5 times right here. So I understood that we could get some selling pressure there because of the trend line right there. It also was trading at about a 63 on the RSI. The last time it was trading for a 63, it was back in this range, right? And you guys can see that it had some good sell-off after. So we knew that there was some downside potential. Now, you're probably wondering, well, Carter, how did you make money if the stock's going to go down? So there's 2 types of ways you guys can, honestly get in a position with stocks. You can go long, which is to buy it, or you can go short, which is to sell it. Now, when you short a stock, you're pretty much borrowing shares that your brokers have in hopes to buy them back at a lower price. Shorting is a lot more risky than going long, because if you short a stock at $1 and it goes to $9, $10, you can be out, $8, $9, $10 very quick on $1 stock. Compared to going long, if you bought a stock at $1, the worst that can happen is that stock goes to 0 and you're out $1. So there is more risk involved, but if you understand it, you can make a lot of money off of shorting stocks. So looking at this here, let's get this back up. We can see that trends are crucial for these types of plays. You guys can see the downward trend, making sure sellers are in control there, understanding that resistance point, and you guys can see as we go to like a lower time frame, because it is important to go to several different time frames, because one time frame can be telling you one thing and then another could be telling you another. So you guys can see here that Tesla was really just honestly on this nice and steady upward trend here. And the second that this thing broke through this, we'll actually change this color so you can see it. So the second that Tesla broke through this blue line was our short trade. So it broke down, entering, near and around the 330 or 341 area, and going ahead, going short, keeping our stop loss just above that trend for a possible push back down to that upward trend line that the stock had, gave about a 4-to-1 or a 3.88 risk and reward. So meaning I'm essentially risking $1 to make about $3.88. We also use an indicator by the name of the MACD, which is another entry point indicator. The reason I love this one here is because the MACD, if you can use these crossovers, you can make a lot of money off them. So you guys can see where we have this orange line break down, right? Break down through that blue line. That historically represents a time to sell or short. So you guys can see great, boom, 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 continuing to rally its way down. And then we started to thin out some shares here today just because it was hitting that trend line and I knew we could get some buying pressure. So we originally took a day trade on this on that huge short, sold about half of our shares. And then the rest of the half we were continuing to hold. So then we sold about another half of the half. So we sold, as of right now, about 75% of the shares that we're holding. And the only reason why we did that, for locking guaranteed profit. And two, if this thing tanks down, we have shares to make money. If it pops up, we already covered profit. So it's kind of like a win-win situation. And that's why having that good risk management, understanding the play is crucial to make money consistently. So I hope you guys all enjoyed this. Smash that like button, subscribe. We'll see you guys in the next one. And then guys, next week, the live streams are starting up again. For those of you that have missed it, I have taken some time off, spending time with my wife, baby, all that stuff, because I do have a newborn child. So, hope you guys enjoyed it. We'll see you guys, like, follow, and I hope you guys have a great rest of your day and take care.